Jenny Horne, host of Next Gen Investing, is with us, looking at some of the movers on earnings. IBM, for example, lower after its earnings, and the guidance. Guidance has been a big story for all these earnings. Tell us a little bit about IBM this morning.
Yeah, good morning, Nicole. IBM with, I think, actually a lot to like in this report. Of all of the names I have discussed already this morning, this one looking at least on the most solid of footing. So reporting better than expected earnings and revenue for their first quarter. We saw revenue that rose modestly, like 0.6% to $14.54 billion, ahead of the $14.4 billion expected on earnings per share on an adjusted basis at $1.60 versus the $1.40 expected, roughly. So they did also highlight net income, though, that slid from the same period a year ago. The company said its accelerated productivity offerings are why we're seeing right now that continued profitability. They actually reiterated their expectations now for 2025 for $13.5 billion in free cash flow and at least 5% revenue growth at a constant currency. At this current exchange rate, currency will provide, they said, a roughly 150 bips of benefit for their 2025 growth, which was actually down from the company's prior forecast at around 200 basis points back in January. So management called for around 16.4 to 16.75 billion in second quarter revenue. At the midpoint of that range, at roughly 16.6 billion, that's actually ahead of consensus pretty considerably, which was around 16.3 billion. IBM has become a bit more cautious, though, about the contribution of their consulting business, which they do believe could see some degree of impact from right now DOGE. They did also mention that they're also expecting only about 5% of their revenue to be U.S. federal government exposed, so that's huge. And they somewhat downplayed some of the right now tariff concerns and tariff risks. They do think that that needs to be front and center of concerns, but they said right now they are focused on where their clients can find cost savings, productivity gains, and help partners, really trusted partners that can help them move fast and also scale. And those are their main concerns as they now go into this market. They said before going deeper into their results, they do appreciate the administration's focus on economic growth and rational regulation, and that will continue to strengthen their U.S. position. So I think a company that is trying to right now position itself to be seen as perhaps more defensive in light of the unknowns with tariffs, but unfortunately today not translating into much of a positive move this morning, at least.
Okay, thanks for that, because really we'll continue to follow this story. I will say OPCO came out. They did cut the price target, but they left the outperform rating. They put it to 290. It was at 320, but that's still higher than the current levels. I mean, when we think about tech overall, tech has certainly been the area that has hurt folks, and they're the sovereign wealth funds of other countries here at home. That's really been the sore spot for folks. They want to know when they can get back into this group in a big way, but not just yet, as those tariff talks with China are certainly not even started. A final thought on IBM.
So you mentioned some of the analysts, like the street coverage right now, and actually, like street high prior to some of the updated coverage today was 320. Now the average is 352.60, so that would imply still about 3% upside, but the average does not imply huge upside. The low is 160, so obviously below where we're currently trading, but there's still a conviction prior to this earnings announcements that think 320 could be a high. Of the 23 analysts that cover IBM, about 12 do have buy ratings, 8 holds, and 3 underperforms. No sells, though. So definitely still skews more neutral to bullish, if anything, as far as the sell side is concerned.
And then we get to the airlines, Jenny, as we look. UAL, the CEO, gave different scenarios. Scenario 1, if this, scenario 2. American Airlines, for example, saying economic uncertainty leads us to not give anything at all. Mm-hmm. Tell us a little bit about Southwest and American. We've gotten some news from both.
Yeah, and I think a stark contrast, especially because the companies, like American, for example, will start off with their CFO saying that they are anticipating softness in domestic main cabin to continue, and that they're not really giving much of a, I'd say, optimistic tone. Both of the Delta and United, the names we've already heard from, I think you can find what you want to find within any of these reports. You could see optimism, you could see pessimism, you could also see a more tepid tone, but American definitely does seem the most cautious of now the three. And I compare them just naturally because they are all much closer in size and scale and some of their various offerings right now. But they did say they're polling their 2025 outlook. The current economic environment is too uncertain. American Airlines shares descending as a result after providing that pretty downbeat outlook and tone for the current quarter, saying right now there's just too much uncertainty for them to make further out predictions. Meanwhile, the results from their first quarter also did come in, I would say again, fairly better than expected. Continued strength in the international business, as well as spending on premium flight options, which has continued to drive not only their loyalty program, but their overall growth. That is now a theme we've heard not only from Delta and United, but also from American Express, where continuously there is still a massive appetite for international as well as these more premium offerings, obviously catering towards a less nervous, less cautious consumer. So American has looked at the worst, unfortunately, of the major three by a lot for quite some time, as we're down 47% on the year. But American is also, unfortunately, riddled with its own debt offerings, as it still pays such substantial amounts in debt payoffs every year. To me, it's almost an island in that sense. Southwest down about 24% on the year, and also right now tossing out its profit guidance amid this macro uncertainty. And they also saw some better than expected first quarter results. So it doesn't necessarily give you much I'd say price activity this morning doesn't give you much of a good read on what we saw in the previously reported quarter. We did see actually this name has been trying to make a modest comeback. We really took a nosedive, though, alongside the overall market in Southwest, which keeps it now down about 29% on the year. But right now, I think that the forecasts from at least American and Southwest, while they may turn out to right now be maybe more pessimistic than expected, they continue to speak to the uncertainty of the consumer. And unfortunately, it's completely overshadowing any degree of a beat from these companies, as they did have some pretty decent first quarter numbers. Nicole.
All right, Jenny Horne, great to see you, and great coverage there of IBM, American Airlines, and Southwest Airlines. I wanted to get a big picture here. Thank you, Jenny.